Hello everyone and welcome to another edition of the Forex Technical Market Update. Have you ever had one of those days? I recorded this update or I thought I was recording the update and I was going on and then I realized that the presentation wasn't recording. So this is take 2 on the Forex Market Update. I guess sometimes technology just messes with you, but this one is being recorded, and let's get going. This is a chart of the euro currency, and what is happening here is that the market bottomed near the 105 level and is entering a period of retracement essentially. And what we need to look out for is, can the market close above this swing high at the 110.52? Let me just make a mark here. If the market closes above this swing high at 110.52, then the next area of resistance is up at this 115 level. If the market closes above 115, it will signal a deeper retracement into the 118, maybe even up to the 120 level. So that's what we need to keep an eye out on for the euro. Digging down deeper, we see that the market closed above this trend line here. We had a minor trend line or a minor triangle here, and the market closed above that after the non-farm payroll report. So what we can expect for Monday is, or what we can look out for Monday, because the markets have a mind of its own. There's nothing to really expect, but what we can look out for is to see if the market retest this triangle, because remember, once a area of resistance is broken, the market sometimes comes back and retests that area, because resistance now turns support. So we are going to see if the market retest this area and can continue upwards. Another scenario is that the market may have found the top and may just descend down further. So that's what you can look out for the euro currency. Taking a look at the Japanese yen, what we see is that the market is in a channel. Okay, so we have the boundaries of the channel at 116 and 122. So looking out for the week coming, we will see if the market will descend further. I mean, it's at 118.96 here. Will we descend into the 116 level? And what you can look out for is to see if the market bounces off the 116 level to head back upwards. So that's a scenario in the Japanese yen. But remember, it's always good to do your homework in the market and do not get fixed on one view, because another interpretation that a trader could put on what's happening in the Japanese yen is the fact that we could be in a triangle consolidation. Okay, so this is another interpretation of what's happening with the Japanese yen USD. Which one is right? Well, both of them are right, and that's the beauty of trading. So that's why it's important for you to do your homework at least every day if you are actively trading the markets, to see what's happening on the markets and to see what trades are being signaled. Okay, so assuming that this triangle, if this holds, we could see the market head back upwards to challenge this 122 level on the USD Japanese yen. So that that is definitely something you can look out for. Digging deeper into the 4-hour chart, we see that the market is holding near this 118 level, and I guess if you are going long, you will look for a buy signal to then challenge the 122 level. If we do break below this triangle, we could see, as I said earlier, the 116 level being challenged. Okay, moving on to the Canadian dollar. Now this is more of a legitimate channel consolidation, and what I would be looking for this week, especially because the fact that the market is close to this 124 low. The market is close to this 124 low here, and what we could see is that, or what we're looking for, is to see if the market bounces off of this 124 low, and that will set up a perfect trade to go for the upside to challenge this 128 high. And alternatively, the market could break below the 124 low, which will then negate that trade. So that's what you can look out for this week in the Canadian dollar. Now, taking a look at the British pound, this market is currently challenging the previous low, or a previous area of support. And I spoke about this a couple of weeks ago, where we have in 2013 the market approached this 148 level and bounced pretty significantly. Actually, the last bounce was from 148 up to 172. So that's over 2400 pip move. So these are the type of things we are looking out for. Now, just to note, these support areas are not exact points to the pip. So for example, just because the market may go below the area of support briefly, that doesn't mean the support is breached, especially on these longer term time frames. So for example, in early 2013, we see that the low was 148.32, and then back in mid 2013, the low that was made was 148.14. So that is definitely below 148.32. And this low currently in 2015 is at 146.35. So these support points are more areas of support as opposed to exact areas. And this is illustrated again. This was a support area in 2011. The low in September 2011 was 152.72. Then we had 152.33, and then we had 152.68. So there are, as I said, it's not to the exact pip the low will be made. Okay, so back to what's happening with the British pound. So we're flirting with these low areas, and we see that the market has been flirting with the low here, and it's down one day, up one day, down one day, up one day. So we are in an era of indecision. And what I would say is that if the market is able to close below 146, we could see a pretty significant sell-off in the pound. And if we are able to close above this spike high here, we could see the market challenge this high near the 155. Actually, the exact high here is 155.52. So that's what we can look out for with the British pound. And this is the consolidation on the 4-hour chart. We see the market just really consolidating here, and it's really in a point of indecision. And these are the trigger points. A close below this point here could This point of 146 could trigger further selling, and above this point further buying. So that's what's happening in the pound. Looking at the Australian dollar, looking at the daily chart first, we see that the market is bounced off of the previous low point of 176, and it's important that you see what's happening in the market. And for those of you who are observant, we see that a triangle could be forming in the Australian dollar. Okay, remember that it's important to, if you're actively trading the markets, it's important for you to do this type of work just about every day. Now, if you would like to, if for example you would like to profit from the Forex markets but just don't have the time to trade for yourself, remember you can sign up for a copier service that our trades are automatically copied into your brokerage account. If you don't have a brokerage account, you can simply get a brokerage account and have the trades copied into your account. The account is structured that we take care of the risk management also, and we don't risk more than 2 to 3% per trade. So it's an excellent opportunity for you to start profiting from the Forex market, even if you are not up to speed currently with your trading. So it's an excellent opportunity. If you want to get started, click on the link below and get started. And remember, time is money, and the longer you wait is the more money the amount of profit potential you are missing out on. Okay, once again, thank you very much for listening to the technical update, and have a good trading week. Thank you.